So I help people define what wealth means to them and then help them get there as soon as possible. There's three main vehicles to retire early. It's stocks, business, and real estate, which is awesome because the average age is 65, right? So you've just cut off 23 years off the typical retirement.
Welcome to the Millennial Investing Podcast. I'm your host, Rebecca Hotsko, and on today's episode, I am joined by Tyler Wright. Welcome to the show, Tyler.
Thanks for having me on. I appreciate it. I'm excited to get into a bunch of different topics on finance and investing and see how we can deliver some value to your listeners.
I agree. So today we're going to be talking about how we can retire early, if this is even possible. You're going to give us some of your best tips. And so to start out though, for our listeners who don't know you yet and your story, can you give us a bit of background about yourself and how you got to where you are today?
Sure. Well, I'll kind of do, a short run through. Of course, it's, I guess, a 10, 15 year-ish story. So I'll try to break it down as concise as possible, and I'd be more than happy to expand on anything that you might need me to. But I think an important part is, people, especially when they hear about, I'll tell you, I guess, the end first. So where I'm at now, $1.5 million net worth. I own, 7-8 rental units, $750,000 stock portfolio. And then I also have a social media brand that has over 200,000 followers. So normally when people hear that, to begin with, especially the money part, they say, well, this person more than likely came from a family where they taught them about stocks, taught them about real estate. They must have had a leg up. And while I tell people, I had two loving parents, really three after my parents divorced, my mother remarried, but I never had people that or parents that taught me, I guess, about money or about stocks or about real estate. They did love me, like I said, which is probably the best privilege that you can grow up with, in my opinion. But it wasn't this situation where I knew all this from the beginning. So I worked very hard in school. I got very good grades. And I think that was kind of the beginning of my story because that helped me get a lot of scholarships in college, which I think is, the number one thing that's, facing people from the beginning, especially people that want to be financially free to begin with. Because by the time they figure out that they want to be financially free, they might already be $50,000, $100,000 in debt from school and the like. So I got good grades in school. I, got scholarships. I went to an in-state school. I took college classes in high school, took AP classes, so I didn't have to take as many college classes once I did get there. Was lucky to graduate debt-free. And then from there, I started in sales. And I tell people it was probably not only maybe 5-10 minutes before I realized that, like, hey, I didn't want to do this for the rest of my life. And there's nothing necessarily wrong with it. I like the people and I like the company that I worked for, but I just kind of had this idea, luckily, from the very beginning that, hey, I'm waking up at 5-6 o'clock and, trying to work out and read and, do some of those life things. But then I'm also working from 8 to 6 at the point. It wasn't really a 9 to 5. It was more of an 8 to 6, getting home at 7:30, taking a shower, eating, and then I'm like, all right, it's time to go to bed, right? So from the beginning, I understood that was like, there's got to be more, even if I didn't really know what that was. And that kind of led me on a journey pretty much to learn everything I possibly could about personal finance, investing, and that kind of just stacked on top of one another as time went on. So in the beginning, I focused on, hey, what's the first thing I need here? Well, the first thing was keeping my expenses low, or at least relatively low in the beginning, while I didn't have a high income. And then it focused on, hey, I need money, right? So I need to, make 6 figures or beyond, right? So I need a job where I'm able to somewhat control what I can make. And so while I was in sales, I started with a salary of $30,000 a year, which is crazy to think about now. But then I was able to pretty much double that almost the next 4 or 5 years in a row, from 50 or so in the first year to 100, 150, 200, 250 and beyond over the next 6 or 7 years. During that time, once I started to make a little bit of money and have money to be able to invest, I was like, all right, well, now I need to figure out where I can put this so that it will grow on its own without me having to do, actively earn the income, right? And so the first thing for me was the stock market. And I think that's just because it was the easiest thing to learn. It was very easy to get your money invested in the stock market. Of course, you can start with $1 in something like index funds or the like, where, something more like real estate, you're going to have to do a much more education on the front end. I would say there's more work and more risk involved. Doesn't mean it's not a bad thing, but there's more work to do on the front end. So I started making money, started making more money, kept my expenses low, raised my cash flow, invested into the stock market. After 2 or 3 years, just from reading on the side, I started learning about real estate. And I really, really loved real estate for a number of reasons, just because there's all the different ways that you can control how you make money through things like renovations. There's also tax advantages. You can make cash flow, of course, appreciation, just like the stock market. And you can even find good deals and buy them for less than what they're worth, which you can't really do in the stock market. So I kind of shifted my focus to real estate when I was about 24, 25, maybe 25, 26, actually. First, I bought a primary house, and then I bought a triplex and then a quadplex after that. And so that put me at a point where I was maybe 27, 28. And I, through, raising my income, right, to 100,000, 200,000 beyond, investing in the stock market doing well over, 2015 to 2019, 20, investing in real estate, the real estate market also doing well. I found myself at a point around maybe 27, 28 where I had reached millionaire status. And that's when I created a social media, kind of just to talk about what I had been doing, talking about real estate, talking about personal finance, income, really a conglomeration of more so the system as opposed to just real estate or just the stock market or just raising your income or just dealing with debt and credit and all that kind of stuff. And it really took off. And so obviously, like I said, I can expand on any of those, but now I'm at a point where I've been doing that for the last couple of years and recently just walked away from the corporate world or the 9 to 5 forever as of 6 months ago. And that's mostly from the income that's coming in through stocks, real estate, and then also, through the social media business that's built around those things.
You said so many great things there. Congratulations, by the way, on leaving your corporate job. I think that's super exciting. And I want to dive into some of the aspects that you mentioned there, because I think a lot of people can relate to not only wanting to invest to fund their future retirement, but maybe retire early and have a plan in place so that they can just spend their time doing more things that they enjoy earlier on rather than when you're 60. And so I guess I'm just wondering, you did this, was it in a time frame of about 6 years then that you became financially free?
6, 7 years, yeah, from 2015 to, and then I walked away this past year, so about 7 years.
Yeah, and it's so interesting because we think that, well, to be really successful in investing, the best way is just to get in early. And I think often we think we need a 20 to 30 year time horizon. And for a lot of cases, you might need to do that. But I want to get into some specific examples, I guess, of how much you would need to invest to actually reach your goals later. But first, I'm just wondering, for people who are on the path of financial freedom or wanting to start, where do you think most people go wrong in their journey?
I think it's a very difficult world that we live in, especially when it comes to finances. One, from the very beginning, we just aren't taught these things. I tell people all the time, I went to school for 4 years and got a bachelor's degree in finance. And 98% of what I know is not from that degree. So it just kind of goes to show you that even that, you would think like, hey, I'm going to leave in 4 years. I'm studying finance. I should know, maybe not everything, but I should be on the right track. And it does teach you a little bit about, of course, textbook type stuff, definitions, whatever. But I think a degree, especially a finance degree, what it doesn't teach you how to build personal wealth. It teaches you how to get a entry level job in finance, which I didn't even end up doing. And so I think a lot of people, the first thing I hear is that, well, I didn't go to school for finance. And I tell them, well, I did, and it didn't really help me, right? So we have to kind of throw that out. It really comes down to self-education. And so I think that, just like I said, if I didn't learn it from that degree, then where did I learn it? And I always had a knack or a love for reading and learning. And so, like I said, when I felt like I had a problem, and that problem was, hey, I don't want to be here forever. How do I get out of this, right? First, I believed that there was a solution, even though I didn't know what it was at the time. And I just started reading, right? And so as easy as Googling, hey, top 10 stock books or personal finance books or whatever the case may be is. And so every single week, what I did, and this is kind of how I started my journey, was I had a 30, 45 minute ride to work and 30, 45 minutes home. So I found out that a normal book is about 8 hours on audiobook. And if I listen to it at like 1.5 speed, which takes some getting used to, but I could pretty much read almost a book every single week. So that's 52 books a year, and that's hundreds and hundreds of books over that course of time, which is about what I did. So, but I think where people kind of mess up in the beginning is just they just don't know, right? They don't know. It's not taught to them. And so you first have to seek out the information. And I think now there's a lot of cool Instagram accounts. There's cool, even TikTok accounts, Twitter accounts. There's a lot of great books out there. YouTube is awesome as well. And a lot of it's free, so going out there, exposing yourself to it and allowing it to kind of run you down that path. And I think that I tell people in my, courses and people that I work with, there's two things, I guess, to answer your question with what people are missing and what I tend to tell them that I'm going to give them in that class. It is the information that you need to be successful, which is the how-tos, the strategies, the stuff in the book. And the second one, which is equally as missed, and you can't live without having both of these, is the inspiration that you need to be successful. So there's a lot of people that, and I'm sure you know people like this that know absolutely everything there is to know about, stocks or investing or finance, but they're still having trouble or they're still not getting it. And I think that it comes from a core belief that they don't think that either they're worthy of it, or they think that the answer is always lying in that next book or that next teacher, that next coach, that next course. And so I try to tell people, hey, first and foremost, if you don't believe that you have the opportunity to do this, you don't believe that because somebody else did it, that you can too, then, we have to fix that first. And then once we, have a full belief in who we are and what we're able to do, then it comes down to the information. So the information and the inspiration are the two areas I typically focus on.
Mm-hmm. And then you talked about building over time multiple streams of income, but first starting with increasing your income at your job and then kind of investing in stocks, real estate, getting into other things. So I guess I'm just wondering, for our listeners who likely have a full-time job, they might not have a lot of time to do a side hustle or trade their time for money, I guess. What are some ways that you would recommend, or how would you teach a client on how they can increase their income?
Yeah, and so I think that I always tell people, a lot of people get into their career or they pick their degree and they have really no idea why, right? And even for me, I picked finance because I was like, I think I'm going to work in a bank. I don't really know. And that kind of just goes back to the education system as a whole, where in high school, why aren't we telling kids like, hey, let's give you some exposure into some of these industries, work some like internships, or have more speakers come by and tell you about what they do. And maybe that's going on now, but I didn't have that, at my high school, and I wish I would have. And that way you at least kind of have an idea of what these things are. And that's why I know a lot of people now that are 25, 30, 40. And not only have they picked, a career that they don't really care very much about, it's also not a career that's paying them very much, right? So they're in a situation where they don't enjoy it and they're not getting paid well. So I think at first it starts from the math and understanding, hey, how much do I need to invest? What am I going to be investing in? How much money do I need to be making, right? And how much do I need to be spending, right? So I get that cash flow number. Okay, so I need this, right? So what industries or what jobs or professions even pay that, right? And so you might not be able to start out making 100,000 or 200,000 or whatever, right? Because you have to start somewhere. But a lot of people get in jobs where that's never going to be an option, right? If you're picking a job where you make $40,000, $50,000 a year, and it's a salary job, and there's not really much room for upward mobility, then you're going to find yourself hoping that your boss is going to be able to give you that 3% raise every year, and quite frankly, you're just never going to get there, right? If you're talking about trying to use that solely to invest to become financially free in 20 years or 15 years or 10 years, it's just not going to happen, right? So we have to look for industries where that is an option, right? So I went into sales. That is an option. You don't necessarily have to get into sales, but I know people that are, these industries are going to require more work too, right? There's no easy way necessarily to, make a higher income with like less work, right? So I think we all kind of understand that, but sales, engineering, finance, obviously law, medicine, those kind of things as well. But I think try to focus on, hey, if I'm going to be spending the next 20, 30, 40 years or even 10 doing this, what is the most efficient use of my time from a financial perspective? And so, of course, you've got to balance. Well, I'm not doing this just for money. I want to enjoy it too. But I would kind of argue that work is almost work, in a relative sense. And so if I'm going to be doing something and showing up from 9 to 5, yes, I want to enjoy it. I want to work with good people, not have a terrible boss, all those things. But I want to work in a profession that's going to allow me to control my income, and not, like sales, right? So where you have a base salary, and then the harder I work, the better I do, the more money I make. Because there's a lot of people that the harder they work, the more money they make the same, or the harder they work, they make the same amount of money, right? Because they're not able to control it. So, but outside of that, right? So I think it's coming down to one, picking out an industry where you can see the path. There's not a dead end. Two, if you're looking to make money on the side, of course, you can buy income, right? Through investing. It could be stocks, real estate. Starting a business is another option for some people. And that can be a little business, or that could be, hey, this is going to be my path out. So for instance, my wife is in HR and recruiting. So all day long, she looks at resumes, she does interviewing, she gives tips to people on how to interview better or whatever. And so for her to make extra money, she can post on her personal account and say, hey, do any of my friends need their resumes reworked or LinkedIn's redone, et cetera, right? And so she can charge whatever the market will pay, $50, $100, whatever. And she can make extra money, and that extra money can be immediately invested, right? Because she's already got her income from her job that pays for her bills. So any extra dollar that comes into that system can be immediately invested, right? So, I would say the career path is number one. So whatever you spend the most time doing, that's got to be your focus, right? So a lot of people focus on the side hustles and all that stuff, which are great. But why wouldn't you focus on what you're doing from 9 to 5, 40 hours a week, right? That's your biggest chunk. So let's focus on how we can be most efficient in our income earning there and try to create controllable and scalable income there. And then on the side, if we need to add income, of course, focusing on maybe using your existing skill set from your job, like the resume example that I gave. Or if you have other skills that are maybe not used in your job, maybe you're really good with a camera, maybe you're really good with website design, maybe you're really good with one of those things, right? So you can have two options. You can either go to a company that does that and help do projects for them on the side as maybe freelancing, or you can start your own company with that skill set, right? So focusing on your income from 9 to 5, side hustles by using your existing skill sets or skill sets that maybe you just enjoy, and then taking that income, right, or extra income, and using that to buy assets that produce income like stocks and real estate.
Mm-hmm. And I guess assuming most of our listeners, they're in a set career, but they're good savers. I'm guessing a lot of the people that listen to this show, they're doing everything right. They're saving a good portion of their income. I guess in the context of if they have a goal to retire in 5 to 10 years, first, do you think it is possible to do it in that time frame? And I guess second follow-up would be, how could they do that?
Yeah, I think it's definitely possible, of course. And I think we understand that, if I'm talking about, all right, if we're retiring in 40 years, what's the work amount that's going to be involved? What's the risk amount that's going to be involved? I don't think there's really that much risk, and that's the lowest amount of effort, right? If we're talking about 40 years, right? We can invest. If you need this much money, you invest that much money in index funds, and you essentially can just wait it out, right? A long-term stock market is a proven vehicle to build wealth. Now, once we start lowering that to 20, 30 or 20 or 10, it doesn't mean that it's 100% that you can still get there at every level. There's going to be more work, obviously, that's involved typically, and there's going to be a higher risk level or amount of work involved. So an example, now when we talk about, there's three main vehicles to retire early. It's stocks, business, and real estate, or a combination. But when we're talking about stocks, the way to retire through stocks is using, typically investing in index funds, which I tell people is like I said prior, is probably the easiest way as far as, it doesn't require much work. You basically go to work, you get your income, you put it in the stock market, and then you wait it out for X amount of years, depending on how much you are investing, right? If you're investing $500 a month, or, the only way to get there quicker is invest $1,000 a month or $2,000 a month or more. Now with real estate, you can get there typically a lot quicker. because you're able to buy assets and those assets cash flow. So the real estate, maybe it's cash flowing, maybe it's an Airbnb or whatever the case may be, and it's cash flowing $1,000 a month, right? And your expenses are $5,000 a month. You're 5 Airbnbs away essentially from breaking even, right? So in theory, your assets are paying all of your bills. Now, how long does it take to get 5 Airbnbs? Of course, there's a lot of factors in that, but it definitely doesn't take 40 years. And in my opinion, probably wouldn't take 20 or 10 or 15. Now, there's going to be more work in that. You're going to have to learn how that market works. You're going to have to learn how to secure deals. You're going to have to learn how to operate properties. You're either going to have to operate that property yourself, or you're going to have to pay someone to do it, which is going to cut into your cash flow, potentially make it a little bit longer, stuff like that. And then the last way is a business, right? So a business is kind of a combination of the two, and it's more like real estate. But a business could be as simple as creating something built around what you love. And you go back to our earlier example, if your expenses are $5,000 a month, well, how quickly can you get to maybe $6,000, $7,000, or $8,000 in business revenue from something that you enjoy, so that you're able to walk away from your job? And that point brings up a big misconception that I think people see with financial freedom, because typically in the FIRE community, the financial independence, retire early community, is this idea that you hit this number and then you sit on a couch for the rest of your life or whatever, or something along those lines. And of course, that is retirement, like where you get to a point where you can't work or you do not want to work. And the reason why we typically think about it like that is because typically you hit it when you're 65, and at that point you don't want to work or you can't work anymore, right? Because you're too old. But we're talking about early retirement. It more comes down to what do you want your life to look like, right? So if you're going to be working anyways, and your problem's not really work, it's just I don't want to work maybe under someone else's direction necessarily, or I don't want to work from 9 to 5, or I want to be able to work wherever I want to work, or I want to work on what I want to work on. I want to have PTO when I want to take it. I want to be able to go see my family if somebody's sick, etc. Then maybe starting a business centered around something you love, where you're still working, right? But you're able to live life on your own terms. So in that situation, how soon can you build up $6,000 to $8,000 in business revenue? Of course, it depends on the business and what it is. But that could be done in a year, 2 years, less, maybe a little bit more, right? So we're talking about stocks. It's going to be probably thousands of dollars a month for maybe 15, 20, 30 years, depending on what the market's doing. Real estate, it could be 5 to 10 years, depending on, how good of deals you're able to get and this and that. And then the business could be a few years, right? But, of course, the business, the flip side of that is the business is going to require the most work, the most, skill set, right? The most risk, right? Because if it doesn't work out, then you're back to square one. But it allows you to be able to retire the earliest. And so that's kind of what the system that I kind of show people through and determine, hey, not everybody wants to start a business. Not everybody wants to invest in real estate. Not everybody wants to invest in the stock market. You have to pick at least one of those, right, to have some sort of vehicle to work as that job or escape from your job. But it's more about figuring out who you are. What do you want your life to look like, so that you can piece in which one of those fits best for your path to early retirement.
Mm-hmm. You mentioned so many great things there, and that's exactly why the FIRE movement resonated so much with me, because it's like you said, it's not about just hitting that number and doing nothing. It's about having the time and freedom to do more of what you love. And some of that might still be working on a business or just something that you're more passionate about. And so I guess let's walk through kind of a realistic example for a listener, because I'm assuming people who listen to this podcast, they like investing in stocks. And so what if someone wants to just go that route? That's what they know. They don't want to dive into real estate investing. And so can we go through an example of how much someone would have to invest, let's say every month, and at what rate of return to hit a goal? So I guess we'd have to put some parameters around it. So what do you think is a reasonable retire early goal?
Yeah, so I wrote down some numbers just because I would have to put in a compound interest calculator. I didn't want to have to just do it off the top of my head, and I wanted the numbers to be somewhat exact as far as the returns and all that kind of stuff. So there's 3 main factors when it comes to the stock market: how much you're investing, per month, and then what the rate of return is, and that's pretty much set when we're talking about, projections and things like that. And then the last one is for how long, right? So obviously, if you want to retire in 10 years, you're going to have to, you have to contribute a ton more up front. And then if you're willing to wait longer, then you wouldn't have to contribute as much. But when we're talking about the stock market and solely that, like you said, like, hey, I'm not going to invest in real estate. I'm not going to start a business. I want to work my job, put money in index funds, and I want to retire. That comes down to the Trinity study. So the Trinity study was a study done years ago by a group of economists. And what they were trying to figure out is basically the answer to that question. So if I have a stock portfolio and it's built up to this amount over time, how much can I reasonably withdraw from that portfolio and not, or have a statistically unlikely chance of running out of money, right? So now we can all, as an example, just to kind of further that point, if I had $1 million and I took out 50% per year, I took out $500,000 per year, well, it'd be gone in 2 years, right? And maybe a little bit longer than that, because if the amount of it were to rise from the stock market, and maybe it would have a little bit left over. But that's an extreme example just to kind of show you the rest of the example. So what they found out is, all right, how much can you reasonably take out and not run out of money over the course of 30 years? And so that also matters, when do you take it out? Do you take it out in 1935, or 1930, right before the Great Depression? Or do you take it out during World War II, or do you take it out in the 80s? And so when also matters, depending on, what returns are doing during that time. So they ran a bunch of studies, and the number they came up with is 4%. That's called the 4% rule. And so you're able to get up to your number, and then you're able to take out 4% per year, and your chances of running out of money over the course of 30 years is very, very low. It's 99.9% that you won't run out of money over the course of that time. So we use that to kind of give us a ballpark estimate of how much we should be shooting for. And then we can kind of reverse engineer, okay, how much does that mean per month? And so a couple of numbers, just as an example, how you determine your number is you take your yearly expenses. So let's say if your yearly expenses were $40,000 per year, and then you multiply that by 25. So that 25 number is just 4%, the 4% rule, divided by 0.04. So $40,000 expenses divided by 0.04, that's the same as multiplying by 25. So that would give you a number of $1 million, right? So if you had $1 million and your expenses were $40,000 a year, at that point, you could take out 4% of that portfolio per year and not have to earn any other money. And you'd be able to live your life over the course of the next 30 years and have a very low likelihood of running out of money. Now, to give, I guess, some numbers as far as how much you would have to invest. So an example, if you invested $1,000 per month for 20 years, that would give you $550,000. So in our example, that wouldn't be enough to retire, right? You'd have to keep going. So the number I actually used down here at the bottom is 1.6 million. So 1.6 million is maybe about, annual expenses of 65,000, which I think is kind of a reasonable middle of the road estimate to use. So again, 1,000 at 20 for 20 years, at 1,000 every month for 20 years at an 8% return, which is a good estimate to use. The stock market is typically about 10 to 11%. I think with these estimates, you also want to be conservative, because if you start doing 10, 11, or 12 or 13%, well, that number might look really good on paper, but when it comes down to be able to retire, you're like, well, what happened, right? And so I always think being a little bit conservative with those is good, and that way you don't get yourself in trouble on paper. Now, if you invested $1,000 a month for 40 years, that would be 3.1 million, right? So you're way past your numbers. So now we can kind of work back and try to find a number in between that will get us to 1.6 million. So if we were to invest $3,000 a month for 20 years, that would give us $1.6 million at an average 8% per year return. So if you were 22 right now, that means you could, basically take that path, invest in index funds, and be able to retire at 42, which is awesome because the average age is 65, right? So you've just cut off 23 years off the typical retirement and basically cut those amount of years in half, from 45 years to 23 years. Now, obviously, you can continue you can't really mess with that 8% number too much. And time is time, so you can't really mess with that. So if you want to get there quicker, the only number that you really have control over, which is what I focus on, is how much you're contributing, right? Which is raising your income, potentially lowering your expenses. That way you have more money to invest. The more you invest, the quicker you get to your goal. So if you were to invest $5,000 a month, it would only take you, instead of 20 years, it would take you 15 years to reach 1.6 million. So now you're retiring at 37, 38. And now if you were able to retire $10,000 a month, which I understand is a ton of money, and it doesn't mean that you start off at 22 investing $10,000 a month, but maybe you're able to work up your income, et cetera, and get up to that point. $10,000 a month would only take you 10 years, right? So you'd be able to retire at 32 years old, going down this path. You'd have $1.7 million at that time. So those numbers can kind of give you an idea of, how we come up with those calculations and how we work it out for somebody that is interested mostly in, hey, I want to work my job. I have people all the time. I tell them, hey, you might not want to do real estate or business. If, let's say, you're a nurse and you love being a nurse, you want to be a nurse, you enjoy it, but maybe you just want to have the option to work less or the option to retire in your 40s, right? And so for that person, like, hey, why don't you just go to work, invest in the stock market? And so as opposed to, like you said, adding more to your plate maybe after work through investing in real estate and learning about that and operating properties. And so that can kind of give you an idea of how that person might, look to accomplish that.
Mm-hmm. And I think it's so interesting what you said. When I've done these calculators so much, I just find it fun to do, honestly, going through the different experiments of how much you need to invest every month. And I tend to sometimes do scenario analyses where I put, what if I just got 5%? What if we have a lost decade? Because that could be a very real possibility. And stock returns are only 5% or 4% after inflation, because you always want to kind of include real too, not nominal, because we lose purchasing power over time. And so being a bit more conservative can help you too, have a more of a buffer with your estimates. And I did want to get into this with you about what you're looking at for investment opportunities in this coming year. As you talked about this off camera, how the market outlook is quite bleak right now for both real estate and the stock market. And so when you're investing with the goal to retire early, you'll have more risk, and I guess you need to reach your goals quicker. And so these downturns can set you back a little bit more than someone who has a longer time horizon. So how are you approaching this in a down market or during these hard times?
Well, I think that the rules and the principles of good solid investing or good solid money management are exactly the same in these times. They're just even more important. So the same things that I always tell people, we're talking about the stock market. You don't control those returns, right? We control the long-term, average of the stock market over time and relying on those historical averages to continue. But the thing that you do control is how much you're putting into the stock market, right? So that's why I focus so much with my students and everyone on how much money that you're making, how much money that you are spending. And those are, to oversimplify it, those are the main two things that you have control over each and every month, right? And so it comes down to first figuring out, doing more analysis on what do you want your life to look like, making sure that's on track, understanding, hey, when do I want to retire? Why do I want that to be? A lot of people, they just come up with these goals like, hey, I want to retire in 10 years. Well, why? What do you want your life to look like? What are you going to be working part-time? Do you want to work, start a business? Do you want to invest in real estate, in the stock market? So I think the first thing people can do, especially in these times, is make sure you really have an understanding of what is your plan and why. And I'll compare it to sports, I guess, just because it's something that is easy for me to understand. It's like if you're down by a lot, in a football game, at the end of the game, the same strategy, still remains, right? You still have to do the fundamentals correctly. And the same thing goes with investing. It's not like, well, the stock market goes down, so then we get into riskier and riskier and riskier plays, right? And you see a lot of people do that. A lot of people, they get nervous or they see their account going down, so they pull their money out of the stock market, or worse, they put it into even riskier play to try to make up the money, instead of focusing on what they've been doing the whole time, which, when the market's good is, hey, I need to focus on making as much money as possible and get as much money working for me as I can. So I think the number one thing people should do is focus on introspection, figuring out your plan. Two, your budget, understanding, what money, where it's going, why it's going there. And I'm not a big person like, hey, don't spend any money at all, eat rice and beans, etc. But I think people should definitely understand where every single one of their dollars is going and why, and if it's serving a purpose or if it's not. And I think there's a lot of ways to actually have addition by subtraction. There's a lot of people, again, in my classes that, maybe they're spending too much on restaurants or alcohol or, these things where it's like, well, I don't really want to be spending it anyways, right? And if I actually don't spend it, because we have this idea, if I spend less money, then my life is getting worse, right? And in some situations, yes, right? If I'm canceling my gym membership because I want to save $100, I would argue that's hurting you more than it's helping you. Now, if we're talking about alcohol or food or subscriptions we aren't using or whatever, right? We can take a look at those and cancel those, and we're actually getting healthier. We're getting happier. That's giving us more energy. That energy is allowing us to work harder, work more focused, work better, earn more money. So there's a positive snowball. And then, of course, the third one, like I said, is income. So I think the same things still remain. Same principles still remain. We talk about real estate, buying cash flowing rental properties. It's about running the numbers just like you would in a good market. If the numbers don't make sense, then you don't invest in the property, right? Just because it's a down market doesn't mean you try to shove money into something that doesn't make sense money-wise. If it's real estate, if it's stock market, then you're planning on holding that money in there for the long term anyway. So arguably, even though I don't save my money for when the stock market's down, arguably, if the price of it, something is $1,000 and it was $1,500 last year, and I know that in 20 years, based off these projections that the S&P 500, I'll use the S&P 500 instead of it being 3,500. If it's 8% per year over the next 10, 15, 20 years, that means it's going to be 10,000, 15,000 in that time. It just is. So that's long historical averages. So if I can buy something right now for $3,000 that I know is going to be $10,000 or $15,000, or have a 99% likelihood of it being that down the road, then why wouldn't I buy it, right? So I think when you understand the numbers, you understand your plan, you understand your money, it gives you confidence, to stick to the script when things are, some of the things that are out of your control are going a little bit sideways with inflation and all that kind of stuff.
Yeah, and to your point, if you just look at a very long time series back to the 1800s of the S&P, you can see it going in a line up, exponential, maybe not exponentially, but it goes up and it compounds by 10 to 12% every year. And yes, there are so many times when there's been wars, recessions, everything. There's been almost 10 years, some narrative that is as bad, if not worse than today. And so it happens, but the market still goes up. And so I just think that's an important reminder for everyone that it doesn't have to be difficult. And so I'm just wondering, do you take the approach then of investing, say, 1,000 or whatever your amount of money is on a certain day every month so that no matter what, you're always putting it in?
Yeah, I think that, when you're talking about investing, if we're going to use the stock market as an example, right? It's investing as much money as possible, as consistently as possible for as long as possible. That's kind of the formula, like I was saying before. And so investing more and more is something you control by making more money as long as possible is just waiting, right? And the one in between that you referenced is as consistently as possible, right? Because, if I invest a ton of money, but I'm only doing it once a year, then, I don't know when the market's going to go up or go down in the short term, right? So a lot of times people take their money out, right? And then they miss some of the biggest days. I think I saw a stat the other day where it's like, the 10 to 15 biggest days in the stock market account for almost all of, the past 2-3 years of returns, right? So things happen quick, and they happen mostly because of, things that we can't control and things we can't anticipate. It could be news or the inflation report or who gets elected president or whatever it might be, right? And so you'll see 10, 15, 5, 10% jumps maybe on big days in the market. So the most important thing is I'm not going to try to, be a crystal ball reader, right? I'm going to go with historical data, and I'm going to invest every single month on the same day. And if you can make it automated, I think it's even better to make it automated. The more that you can take out of thinking of your plan or human error or human behavior or human emotion, the better that you're going to do. Because if you have to sit down and let's say it's the 19th of every month and you have to manually invest. Well, on the 19th of the month, maybe, Powell comes out and says the housing market's going to crash, right? Or whatever. And the stock market drops 5% a day. You're like, maybe I'm just going to wait until next month, right? But if it's automated, you don't see it, you don't touch it. Again, it's all about understanding the plan and the why behind it and committing to it. And then, removing yourself from that process as much as possible. You still need to look at your accounts monthly and assess what's going on, assess if your plan is still making sense. But if you can automate it to where it's done for you, then you take that consistency part of the equation I referenced earlier, and you make sure that you're doing that as consistently as possible, which is an important part of getting to your goals.
Yeah, I love what you said there. And the part about the best trading days making up, it's like, yeah, 10 to 15 make up almost all of the gains. I've read that too. It's so interesting when you see statistics like that because it truly puts into perspective that if you miss like less than 10% of the days in an entire year, you could miss all the returns. And so that's why it's just never wise to try and time things. And that if you have kind of a fixed schedule, it just makes it so much easier in the long run and you're likely way better off. And one thing that I like to do is go into Portfolio Visualizer, and you can make it so simple. Like you're talking about index funds. We talk about a lot of different investments on the show because everyone has a different investment philosophy. Everyone likes making things more complicated or more tactical if they want, but you can really just buy a few index funds. And what I like to do sometimes is go on Portfolio Visualizer, say it's just the total stock market index, VTI or XUU. You put in that stock and then you can say, I want to invest $1,000 monthly, and it'll show you the returns that historically have happened back to when the series started. And it obviously the past isn't guaranteed for the future, but it puts into perspective of how much you could earn going forward, especially if it's a very long time series. Then it just gives you a good idea of where you could end up. And sometimes I like to do that in these down markets to remind myself that it doesn't matter in 5-10 years where it is this year. If all I care about is the next decade.
Yeah, I think just understanding why in everything that we do, whether it's stock market or, if you're in medical school and you're in year 3 or 4 and you're asking yourself, what am I doing here? Right. And then you start thinking, okay, I did this because I love medicine. I want to be a doctor and this is going to be a great career. Right. You're always reminding yourself of why you're doing it, why you're doing the things that you're doing. Right. So when it comes to the stock market, the more you understand those things, and like you said, using these calculators, using this historical data, using people that have been doing it for a long, long time, that have written books, Warren Buffett, whoever it might be, and understanding that, history and understanding how things work can give you a lot of confidence. But I think when people don't understand it or they haven't done their research, it's much more easy to get scared. I'll give a quick example. It's a little bit unrelated, but I lived in Florida, right? And so we had hurricanes, and hurricanes are definitely dangerous, but we're just so used to it. We've seen it so many times that we don't really get scared. We prepare, right? You're still smart, you still prepare, you still need to do what you need to do. But there would be people that would come into town, they'd just move there and they'd be losing their mind, right? They'd be buying $500 worth of toilet paper and boarding up their house, and it's like a tropical storm or something, right? And so why do they do that? They do that because they don't understand the threat that is at hand, and can't properly assess or prepare for it. So I think that all just comes from experience. It comes from experience and education are the main two things. And so with the stock market, that's just experience comes from time and comes from taking action and seeing things happen over the course of your life. And then education, I think, is the way I look at education is that you're basically outsourcing someone else that's more than likely much smarter than you, at least in that whatever particular area they're writing the book on. If I read Warren Buffett's book or whomever, I'm getting to outsource his experience, his mistakes, his failures, his years, his time, his effort, right? And it's not a direct correlation. If I read the book, I don't just become Warren Buffett. That'd be pretty cool, but it allows me to get a lot closer than I was without having to go through those, the time, the effort, the mistakes, the failures. And so using books and using mentors allows you to cut out a lot of that time that it takes to build the knowledge that comes from experience.
Yeah, absolutely. And I guess the other thing is when trying to reach your financial independence goals or retire early, it's hard. It's not easy by any means. And so, what would you say? What are some of the common hurdles that you faced or you see your clients face, and how can they overcome them?
Yeah, I think just life, like I said, is difficult, and life gets in the way. A lot of times, the biggest thing is the first level, like I said, is people that don't have a plan at all, right? So building a plan and understanding why you're doing what you're doing, getting consistent. Consistency is probably the biggest thing, right? I think that we talk about working out. Everybody understands how to be healthy, right? You work out, whether it's running or lifting weights. You avoid sugars, et cetera, right? But why do people have a problem with it? Well, they have a problem with it because they're not able to stay consistent, right? So same thing with finance. So the first thing is learning about it through books, mentors, YouTube, a combination, whatever. And the second thing is really just being consistent. But, the tough part is that the world is really set up for us to have a tough time financially. Why is that? Well, because companies, I'm dealing with, a company that's $1 billion corporation that's spending billions of dollars on marketing to get me to waste my money on things that I probably don't need, right? So, and so me, I'm just a little individual, right, trying to, work against these people that are spending billions of dollars with consumer behavior psychologists on how to trip the individual up to get them to spend their money, right? So I think that just doubling down on the education and the why and understanding what you're doing, and understanding some of these other things, and even reading books on some of these other things, right? And how banks work and how companies work and how marketing works, so that you understand it, is something that can be, really helpful. But, you see people where, maybe they have a child, right? And their life changes when they have a child, or maybe they hit a breaking point where they're tired of feeling a certain way, or maybe they've had some sort of addiction or loss or something like that. And you can see their life change, right? And they understand that, like, why they're doing what they're doing. And I think that if you have that strong why when it comes to finance, and you allow that to kind of push you, when things get tough, that's really the most important thing that you can have, right? And so for me, my why in the beginning was always that, I knew that life, there had to be something else, right? I think it comes, if I had to narrow it down, like, I want to live my life to the fullest, and however I might define that, and everybody else has their own definition, which oddly enough is why my Instagram account is called Defining Wealth. It's not the definition of wealth. So I help people define what wealth means to them and then help them get there as soon as possible. So again, I think that most people just say, hey, here's the information about finance, go figure it out. I say, hey, tell me about you. What do you want? Why do you want it? Let's figure out about you. And then let's kind of use the tools to build a life that you're looking to build as your dream life.
I really like that. I like hearing that backstory to the name because I saw that and I was curious about it. So I am wondering though, what would you say is the most influential or impactful piece of advice or lesson that you've learned that you think has just helped you in this journey?
I mean, there's so many, but something I tell people all the time is that when you see somebody do something that you want to do, maybe it's somebody, they've become a millionaire, they've, started their own business and had success. I think that you can look at that in simplified version in one of two ways. You either look at it, somebody either looks at it and says, hey, this person did that. That's something I want to do. I'm jealous of them. I don't really, like it. Or I guess three ways. They're either jealous, or two, you say, well, they're much smarter than me, or they're more special, or they went to a better school, or they whatever, right? Because they did it, now I know I can't do it. For me, I think I had a lot of that, even growing up, and still, I mean, I'm not, perfect, nowhere near it, and never will be. But I think I've started to shift my focus to hearing things from other people where maybe they're doing better than me, and understanding that doesn't mean that they're smarter than me. That might mean they're smarter than me in that particular category, but I should congratulate them and appreciate it as long as they did whatever it is with integrity and the right way. And then in deciding, hey, because they did it, that means also I can too, because if they're a human being, and, I always say respect people, but don't put anyone on a pedestal, right? So if it's somebody that has done something you want to do, look at that as, hey, they've done it, but hey, guess what? They're a human. I respect it and I respect them, but I believe that I can too, because if they're a human being, I'm a human being. And I think just understanding that whatever you want to do is truly at your fingertips. I know that's pretty cliche, but I still think that people don't fully understand it, and they definitely don't fully embody it.
I definitely agree with that. I had a guest on a little while ago, and he was talking about how we all think that our human experience is so unique and we're going through something that no one else is, but really it's not. And so it's really helpful to learn from others because chances are there's several other people that have gone through something similar and that you can look out to for if you want to reach their path or do something that they've done. And so it's really interesting to leverage all the available tools and resources that we have as our disposal now. And I do want to ask you because maybe some listeners are interested in going through another avenue to, I guess, reach their financial goals. What tips would you have for someone who's maybe interested in starting a business, maybe an online side hustle? What would you share with them?
I think to simplify it, just do it. Whatever it is. I think a lot of people I see when they're talking about starting a business, they have an idea and they're so concerned with, well, I need an LLC and I need a website and I need business cards and I need all this stuff that doesn't actually have anything to necessarily do. And sometimes you need those things at certain points, right? But I think so many people get so caught up. The hardest part in anything is starting, right? I think a lot of people trick themselves into thinking that they're doing stuff, but actually they're just actively procrastinating, if that makes sense, by doing these things that aren't the thing. So if you want to start a business, and a good example of this is I recently listened to a podcast. It's the guy, I believe he started Netflix. And so he kind of helps people live on the podcast episode start whatever their business is. And so the lady it was something along the lines of an app that you could use for maybe someone that's elderly to almost like an Uber for like a nurse to take care of you or something along those lines. And she was going through all these ideas and talking a million miles an hour. And I don't think she stopped talking for 20 to 25 minutes, just about all the different things she needed and had to do. And you could tell she was overwhelmed. And he's like, have you tested it out yet? She's like, what do you mean? He's like, have you tested it out at all? Have you done it at all? And she's like, no, I need, and she goes down the path and he's like, stop. If you want to figure out if this is something that is feasible and that is going to work, I want you to go down to a nursing home or wherever there are nurses, hospital, nursing school, and I want you to go pick out one nurse, and I want you to go find elderly people, and I want you to test this out. Even if you have to be the intermediary with your cell phone, where you give the elderly person, hey, is this something that you would want to use? If it is, okay, cool. I want you to, whenever you need somebody, I want you to call me, whatever, it doesn't matter the time or the day, and then I will get you in touch with a nurse, right? And so you would learn more in just the one or two phone calls right there than she's probably learned in the last 6 months trying to set up all these systems and apps and whatever. And she might actually crumple up that piece of paper she's been working on for 6 months and understand, oh crap, this is something that I didn't realize because I wasn't doing it, right? So same thing with when you're starting a business. If you want to post about, for me, I started posting about personal finance. I didn't know it was going to be a business. I didn't know if I was going to have a course. I didn't know if anybody was going to like it. I just started posting. I posted for 8 months in a row, every single day, without fail, before there was a single dollar that was made online. And I don't know if I would tell people to wait that long, but again, for me, it was like, hey, I enjoy this. This is something I want to do. And so I just did it, right? And I learned more in that 8 months. And after 8 months, I understood I had an audience, I had a community, and they told me what they wanted, right? So I was so worried about figuring out, hey, what do I need to, should I make a course? Should it be on real estate? Should it be on, a coaching program, one-on-one, this, that. And I just posted and I opened up my ears instead of my mouth, and people told me what they wanted. Say, hey, I want a real estate course. So the first thing I did was I just created what they told me to create, right? And so again, it just kind of comes down to putting it into action and allowing that action experience to help build your business, as opposed to trying to figure it out on the front end, because you're never going to figure it out ever. Whether it's a year, 5 years, 10 years, it's going to be a consistently moving goalpost. And so you just have to get comfortable with that and understand that the more action you take, the quicker you're going to get to your goals in business.
Yeah, I absolutely love that you mentioned that. And I love that podcast too. I can't remember the name of it, but listened to it a couple years back, and I do remember that episode. It's just so great hearing his advice to the people. And I will say that the biggest mistake I made when starting my business, which was a boat club here in Kelowna, was I wanted everything to be perfect before I started. And my partner was like, let's just do it. And I was like, no, like things need to be perfect. But that I think set things back, because then you don't launch quick enough. And then I was just so concerned with everything being right that you forget that you just need to sometimes do and then learn before learning everything and then doing, because you could be left in the dust at that point.
Yeah, I think it's now, paralysis by analysis is kind of I guess the way people describe it. And that's what I was saying earlier, where that's kind of the biggest hurdle that a lot of people have, is that they spend so much time over analyzing investing or the market or this or that. And should I do it? When should I start? Instead of, yeah, you do need to learn right on the front end. You do need to be educated. But I think that there's, especially with rental properties, because rental properties are, like I said, a little bit more difficult than investing in the stock market. But I see so many people that have been on biggerpockets.com and chat boards for 1 year, 2 years, 5 years, and still haven't bought a rental property. And those are the people that, hey, we need to, at some point, you got to rip the Band-Aid off and you got to jump in. And there's only one way to truly, truly learn, and that's through doing.
Yeah, at the end of the day, you could read all the books and listen to all the podcasts, but you learn so much more from just doing it. And real estate is the next thing I want to get into, and I want to take the plunge this year and get into that. But I want to thank you so much for coming on. I really enjoyed today's conversation. For our listeners who want to connect with you and learn more about everything that you do, where can they find you?
Yes, I'm on pretty much all platforms under Defining Wealth. My name is Tyler Wright, so it'll probably be Defining Wealth, Tyler Wright. You should be able to find me on Instagram at defining.wealth. This I hate the most because all mine are like one letter off because they were like somehow taken. But defining.wealth on Instagram, Defining Wealth on Twitter, and then I'm also on TikTok as well under Defining Wealth. And so in the year ahead, mostly I focus on Instagrams, and in the year ahead, I'm really trying to put an emphasis on going live as much as possible and teaching on both TikTok and Instagram, and trying to pump out as much, more in-depth free education as possible. I do that through my posts, but it's difficult in today's day and age where it's 30-second reels or shorter to get that information out. So I'm still going to be doing that because you have to do that to grow. But follow me on Instagram, follow me on TikTok. I'm going live. And then also, I have courses and coaching programs as well. You can find out through the link in my bio, or you can message me on Instagram to see if you might be a good fit for any of those if you're interested.
Awesome. I'll make sure to link those all in the show notes. Thank you so much for coming on today, Tyler.
Awesome. I appreciate you having me. I really enjoyed the conversation, and I'd be more than happy to come back on anytime.
If you establish goals to help you realize the importance of the money and why you're accumulating, and then you establish rules that help you eliminate unnecessary mistakes, I think you're going to start to see a lot more success in your long-term strategy and probably reduce some anxiety that you might be facing.